In this video, I'm going to explain to you how I got into a buy setup trade after I saw a shift in market structure. So as you can see, we're already trending to the downside, creating this. We have this lower high right here, and then the lower low right here. So all I needed to see was a 15-minute shift in market structure within this leg. And the moment I saw price break structure right here, you can see the high and then this low. And then right here was a break of structure. So you can see that very clearly. This was the break of structure. Now, after I saw the break of structure right there, because I was already anticipating for price to come into this key level right here, because we had this 8-hour inefficiency that was resting there. So if we go to 8-hour time frame, you can see there's an inefficiency resting right there. So I was already anticipating for price to come and fill this inefficiency. If we're going to keep trending to the downside to run this sell side, I wanted to see that inefficiency get filled. And also we have this candle with our wicks resting right there as well. So what I did was I was waiting on the 15 minutes time frame, and I was waiting for this high to get broken, low, and then right here was a break. Remember what I said, the last move to the downside before the expansion is your key level, and that is right here. So right here was where I was anticipating for price to come into. And once we're in here, I want to see a 3-minute shift in market structure, and then I'll look for buys. So we'll go to 3 minutes time frame. And as you can see right here, we created a high and a low right there. You can see the high. Right there is the high, and right here is the low, and then this is a break of structure, and this was the last move to the downside before breaking this structure. So that is my entry using the bodies of the candle, because that's where most of the volume is going to be. Now if we're using the bodies of the candle, you can see right there how nicely price tapped into it twice. Came the first time, came the second time, and then we saw an expansion. Low, this low, extra 3 pips, so that's about 9 pip stop loss. So right there, 9 pip stop loss. And then my take profit, I didn't really put my take profit exactly at that high, at that inefficiency on the 8-hour time frame. I'm going to show you where I was targeting. So let's go to 30 minutes. So I was basically targeting right here because there was an inefficiency resting right there. Here, I was targeting right there because that was my low hanging fruit. So I anticipated for price to run above that key level right there. So it wasn't really a high risk to reward, but a 1:3 is perfect for me. And I took that and called it a day. Then I was waiting for price to come in here so I can get in on the sell in anticipation for it to run to the downside. And this right here is going to be my exit for the sell. So once price comes in here, I'm going to exit my position on the sell. So right here was my sell, and I used this high as my entry. This high was my entry for the sells right there, and my stop loss was this position. And why did I use this position as my stop loss? It was basically because of this low, high, low, high, and then we'll have this low right here. This right here is a relative equal high liquidity. In as much as price took this liquidity and dropped, it's still a relative equal high. So, and if you look at it from other brokers, you will see that it's more a relative equal high. But on this broker, it's more like a run on liquidity. So this right here, I was anticipating for price to come in here, candle without wicks as well. So this is the high, this is the low, and that is why my stop loss was above this high right here. And then after price dropped down, breaking this low, even though I wanted to see a close, but it didn't close, I just traded my stop loss to this position so that if anything happens, I'll lose probably around 0.15 of the trade. But before the end of today, if we don't break here, I'm just going to trade my stop loss to break even. So if anything happens, it can just take me out and I call it a day, because I already made profit from this one, and I'm targeting right here. For this one right here, I'm targeting price to come in here. So that is the trade, and the other one that I got into in anticipation for it to drop down. And another reason why I got into this trade was my analysis on the dollar as well, which I'm going to share with you as well. So if we go to the 4-hour time frame, you can see on the 4-hour time frame we had this gap right here. So I outlined that, and then we'll go to 1 hour, go to 30 minutes, and then we'll go down. Let me remove this. So on the 5 minutes time frame, you can see right here, we'll have a high, we'll have a low, have a break of structure. This was the down close candle before an expansion that broke structure. The bodies of the candle, that's where most of the volume lies. Price came back down, tapped the inefficiency, but it didn't tap the bodies of the candle. So the bodies of the candle, I was anticipating for price to come in there. That is my key level for me to anticipate for price to go to the upside on the dollar and to the downside on the euro. And you can see how nicely how that's aligned, and price came in, tapped the key level, tapped the line, the borders of the candle, and expanded. So as long as this analysis is correct, I wouldn't want price to run this low. I would want it to continue trending to the upside. But as you can see, we're heading to the end of the day for today, the end of the trading day. Right here is my drawn liquidity. I anticipate for price to come in here and potentially rally above this high. So my drawn liquidity, overall drawn liquidity, remains this relative equal high. We're going to go to the 4-hour, look at the 8-hour as well. So on the 8-hour, you can see we dropped down, took liquidity from a previous low of an 8-hour. So that should potentially give us some momentum to go to the upside. So if you have any questions about this, you let me know.